is actually what we call the high risk warning. And we have to show this. We show this no matter what, because we want everyone to know this is actually happening. So we'll pause for a moment. That time I left my camera on so people would know that I didn't leave. Guys, this is all pretty basic, but you can read it over. It just lets you know the past performance is not necessarily indicative of future success. That means that whatever the traders show you, whether they're showing you what they did yesterday, or this is a trade I took this week, or last month, or today, if they show you that and it's a successful trade, know that there are some trades that are not successful. That's kind of how it goes. What these guys are doing is they're trying to show you how to maximize your probabilities and find the best opportunities for you for the most potential to make yourself some money and to try to increase your money. But no matter what happens, you have to remember that this is general advice and it does not take into account your objectives, your financial situation, or your needs. This should not be construed as personal advice. Okay. So you guys have read the high risk warning. We're going to go on to our next speaker, who's actually going to be, again, I've been excited all week long because we're getting so many new people who don't normally do these events and really haven't done our events. So it's kind of cool. Today, we've got Mr. Peter Schultz here, and Peter comes from wealthbuilderpublishing.com. Now, this is actually a really cool topic because this topic is how to retire in 3 years or less on $9,000 a month, tax-free. So read that again. How to retire in 3 years or less on $9,000 a month, tax-free. So when I hear the words tax-free, my ears go up and I'm excited. But let me tell you a little bit about Peter. Peter's been a trusted resource for self-directed investors since 1996, specializing in successful trading strategies. He is a nationally recognized speaker on options trading and an author of several books, including Passage to Freedom, The Options Success Trading Package, and many others. He is the founder of Cashflow Heaven Publishing in 1999, dedicated to helping subscribers achieve a better lifestyle, through trading and investment strategies. Peter's actually one of those smart guys. He holds a Bachelor of Science degree in business with concentrations in marketing and finance from Southern Oregon University. Peter Schultz is here. Peter, how are you?
I'm doing great, John. Thank you so much. Can you hear me okay?
We can hear you perfectly fine.
That's awesome. Appreciate the nice introduction.
No, we appreciate having you here. Since our talk that day, I've been kind of thinking about that thing that you were telling me about that you just started doing. Well, and I don't want to spoil it in case I don't know what you're. I don't know if you're talking about
the micro caps.
Yeah, with the micro caps.
Oh boy, we got. Oh boy, I wish you would have gotten involved. We got some really good things going on.
Yeah, I don't want to ruin it in case you were going to mention it during the thing, but with the micro caps, I was like, wow, that's some interesting stuff. But anyway, go ahead. I'm sorry.
Yeah, no. So, are we ready to go?
Yeah, it's all yours. We'll give you the screen share. We'll hit mute, and if you need us, let us know.
Okay, thanks, John. I appreciate it. I'm going to hit screen share, and we are going to start from the beginning. Okay, this presentation is how to retire in 3 years or less on $9,000 per month, tax-free. If that sounds kind of far-fetched or you don't quite know how that's going to happen, I'm going to walk you through it. Today, you can start with as little as $5,000. My name is Peter Schultz. I'm the founder of wealthbuilderpublishing.com and thewinningsecret.com. Most of what we're going to talk about here today is the winning secret. The reason I call it that is because I was very good at losing money for many, many years. When I first got involved in options trading in the mid-90s, I thought my biggest problem was going to be what color my Mercedes-Benz was going to be because people talked about how much money they were making. And a horrible thing happened to me when I first got started. I made money on my first 3 trades and things were going great. I thought I'd found the Holy Grail, that magic money tree that everybody's looking for. And then my account got wiped out shortly after. And if that sounds at all familiar to you, it should, because it happens to just about everybody. And I finally figured out some ways to trade after a long time where you just naturally win most of the time. We're going to be talking about trading in the stock and options markets. No surprise there. And as you know, there's no guarantees. We're trying to tilt the playing field in our direction. And what you're about to see is the best method for doing that I've seen in my 30 plus trading career. The really cool thing about this is it's not super complicated. A lot of trading strategies are complex. You have to get in and out at just the right time. This thing is fairly automated in the best of ways. And so one of the reasons I like it is it's not only consistently profitable, but it's pretty hands-free. So there's 3 key elements you're going to need in order to retire in comfort in 3 years or less. You're going to need safety. So this is sacred money. You cannot lose it. Warren Buffett, is famous for his tongue-in-cheek quote, which says, the first rule of investing is don't lose money. And the second rule of investing is see rule number 1. So obviously he's done pretty well. He doesn't like losing money. I don't like losing money. You probably don't either. So especially when you're trying to put together retirement, we're really focused on safety. And we're going to need better than market returns. If you don't have that many years to invest, this part is critical. What we want to do is compress a whole bunch of years into just a relatively short period of time, in this case, 3 years. And number 3, we want to see a tax-free buildup and payout. And I had a great tax accountant once that said the only money that matters is the money that you get to keep. So you keep these 3 elements in mind, and you're going to, if you can master these, you're going to end up doing pretty well. So let's talk about safety. With all the investments you've done in your life up until now, did you ever get an exact percentage probability that they would work out? No, of course not. That's ridiculous, right? So you buy a little investment property, a little rental property on the other side of town, and you want to rent it out, and you want things to go really well. You don't know what's going to happen. The big factory in that town could shut down and everybody could suddenly become unemployed. You don't really know. There's no guarantees. Nobody ever comes up to you and says, you have this exact percentage of probability of this working out. But with this strategy, you actually do, because of something called the Black-Scholes formula. Now, the Black-Scholes formula, if you've heard of it, it's really what made modern options trading possible. This is the formula that made the options market possible back in 1973. These guys actually got the Nobel Prize in economics, the 3 mathematicians that discovered it, in 1998. And it was so significant. It literally, and if you're an options trader already, or you're curious about options, what's kind of cool is if you try and game the market a little bit, or you try and game options. And I used to lay awake at night, trying to come up with strategies where I could really get an edge. And I go to test them out the next day, and I found out that the options market and the formula, the way it works, is fairly efficient. It's pretty hard to game. You can get a pretty significant edge, but this is pretty good math. So it's the formula, not me, that says you're going to win the vast majority of the time. So safety, to see how safe this is, let's take a look at a typical trade. So this is obviously something that's trending. This is a little while back. This is Tesla when it was really going down. This is actually, I just lifted these right from our subscription service. So if you decide to subscribe, this is just exactly the kind of chart you're going to see. And I'll have comments. The stock has been continuously trending lower, and we're selling above downtrend resistance. So you look at this, and this trade could go against you, but it's probably not going to. And I just want to point something out. If you trade options right now, if you're interested in options, I'm going to tell you a truth, and that is more people have lost more money due to time decay in options than any other single factor. In other words, you might have been right about the stock, but it's almost like a cliche that the stock does exactly what you thought it was going to do the week after expiration. So your option expires worthless, you lost all your money, and then the very next week, that jump happens, or that pop happens, or whatever you thought was going to happen happens, but it doesn't do any good because you lost all your money. So if we look on the other side of that statement, there's something really kind of inspiring. And the inspiring comment is more people have made more money on options time decay than any other single factor, any other single characteristic about options. So who's making the money on time decay? The option seller. Who's losing the money on time decay? The options buyer. Now, and what's ironic about that is everybody wants to be an options buyer. Why? Because you could potentially hit it out of the park. You could get this big home run trade where people talk about, we got 300% in 3 days or whatever. That's options buying. And that's really, really cool, except it doesn't do you any good if you wiped out your account because of too many times the time on the meter ran out before you had a chance to move your car, and you got a really nasty parking ticket from the options market. So safety, the good news is we don't have to guess. In this case, this particular trade, we have an 82.71% probability of winning. So I love that. They take a percent out to the hundredth here, 82.71 probability of winning. And this happens to be the Thinkorswim platform, which I absolutely love. And it'll tell you right here. And this is the second column, says probability of being out of the money. Let me see if I can come up with a little red pen, help us out here. Right here, this column, probability being out of the money. This is our trade. It tells you right here, 82.71% chance of winning. That's pretty good. Let me ask you a quick question. If a buddy of yours took you out in the backyard and says, listen, I've got a coin here, kind of a trick coin. It's sort of weighted on one side. And it's weighted towards heads, 82.71% of the time. And every time it comes up heads, you're going to call it heads. Every time it comes up heads, I'm going to pay you $1,000. And if you lose, if it comes up tails, that's 17% of the time. When it comes up tails, you're going to have to give me about $1,500. So how many times would you flip that coin, or how long would you stay out there and flip that coin? My suggestion to you, if you really figure this math out, is you would flip that coin. You'd have your buddy flip it. You'd keep calling heads over and over and over until it was so dark you couldn't see that coin anymore, because you are going to make a lot of money. If you're skeptical about this, I'm going to give you a chance to try it out for yourself. And it is really cool, if you've had mixed success in the markets, to just win over 80% of the time. And we were actually, in many cases, doing better than that. So we have an 82.71% chance of winning before market direction, trend, or fundamentals are considered. How much do they add to our probability of winning? So I just want to make a really, really important point here. See this big downtrend here? That is not taken into consideration in that formula, in that Nobel Prize winning formula. All the formula does is it plugs in factors like volatility, how far out of the money it is, how much time is left, these kind of factors, but it's really a snapshot at that moment of where the stock is. Doesn't take into consideration trend. It doesn't take into consideration Elliott wave theory. It doesn't take into consideration fundamentals that are deteriorating or some trouble that the CEO might have just gotten into. But if you factor all those other things into the formula, you can see that you might have a better than 82% chance of winning. And this is kind of how this is playing out in the real market. So by the time we stack all the factors on your side, you can expect to win on 8 out of 10 trades. Now this is the really important part for you lifestyle type traders, whether you watch your trades or not. Now, what's cool is if you like to travel, say you're a surfer, you like to go down on surf and safari down in Mexico or South America or Central America, or you like to go over to Bali, or you like to sample food. It's one of my goals to eat my way through Italy here. I was just there in November and I thought, man, this country is cool. Love the people, love the train rides, love the little towns. You can trade like this no matter what time zone you're in. And I'll show you how to do that, how to set up these automatic orders. But it's awesome. And time decay never sleeps. It's just working for you every single day. So you're better off in many cases if you don't watch your trades, making this not only a great cash flow strategy, but a great lifestyle strategy as well. Very, very cool way for making money. And for trades that don't work out, we've got a proven strategy for cutting any losses in half, so you can easily make the money back plus some on the next 2 trades. So this strategy truly gives you a mathematical expectation of winning. That's all you need to make money over time, exactly what you want for a realistic retirement plan. Now, this mathematical expectation of winning is really, really important, because when I first started out in trading, I thought, well, how am I going to win? What's my edge? Well, I'm smarter than the next guy. I'm quicker than the next guy. Keep in mind, that was like 35 years ago. I was a lot younger. And with that youth comes a lot of cockiness, especially if you've had success in other areas of your life. And you just think, man, you're going to get into trading, you're going to kill it. And I'll tell you, I don't know what your experience has been, but I think trading was the most humbling experience I've ever had. I had my rear end handed to me so many times. I just decided, you know what? I might not be smarter than the next guy, and I might not be quicker than the next guy. I need some kind of an edge that has nothing to do with me. And I found it here. This is a true mathematical expectation of winning. And it's awesome, because it doesn't matter whether you're short or tall, or what color your hair is, or whether you have hair, or whether you're a man or a woman, or what your parents did for a living. None of that enters into it when you have this mathematical edge on your side. So you're going to get better than market returns. You need them if you don't have that many years to invest. And imagine if you could combine the best part of a business with the best part of investing. So, no inventory, no sales staff, not a location that you're necessarily paying for. You can travel around and do this. You get business style cash flow. Imagine creating that, but without the business, just doing it with the money that you have. And so the best part of a business is weekly consistent cash flow, and the best part of investing is it's passive. It doesn't take too much of your time, and you get both with this strategy. This strategy combines both. It does something pretty remarkable, and it's your secret to having a real shot at retiring cash rich in 3 years or less. It can create returns every week. Now, I know people that it doesn't take much for them to live. I got a buddy, he's got plenty of money, but his wife divorced him, and he was so down and out. He was walking down the sidewalk. He was looking at the ground. I think the guy was practically suicidal. He really loved her. She ran off. She was a operating room nurse and ran off with a doctor. She always wanted to be with a surgeon, and that was really great for her. But my buddy, who's the nicest guy in the world, was just devastated. Well, a buddy of his invited him over to Cambodia. He went over there for just a couple of weeks, a few years ago. The guy's never come back. He says he can live like a king on I don't know, $800 a month, maybe 1,000 if he's just blowing money left and right. Got a beautiful place to live. Got a beautiful gal now that's just totally in love with him. So, we all have a different level of income that we need to make us happy and to survive. You might need $10,000 or $20,000 a month. Whatever it is, it's fine. But this creates cash flow, and you can create it every week. So when it comes to investments, most people think in terms of annual returns. The entire investment community wants to get you thinking that way. But if you change your thinking to creating weekly returns, your expectations rise along with your probability of success. So imagine if you got even just a really modest return for a week or two, but it was every week or two, and it just compiled and compiled and piled up over the course of a year. You're not going to get a 10% return in a year, or even a 20% return. I'm not even going to mention it. After a minute, you'll be able to do your own math, but it's just going to blow your mind. And people are using this, and I got CEOs of companies that are doing this because I've gotten to be friends with a bunch of them through our microcap service, and they freaking love it. Better than market returns if you don't have many years to invest. This part's critical. Back in 2012, the Options Clearing Corporation started experimenting with weekly options expirations instead of the traditional monthly expirations. And they started off with just a handful of the most active stocks like Apple and Google. But now, years later, there's over 430 stocks with weekly options, plus a whole bunch of indices like the S&P. Heck, the S&P 500 has 3 expirations a week. If you get it to be a little bit of a junkie on this, boy, you can be having stuff expiring every single day. So this is monumental. It's a monumental change, and now it means you can create a whole series of weekly paychecks, which is what my entire subscription service is dedicated toward providing. And I hope you don't get bored winning all the time, because that's kind of where the mathematics of this, the probabilities, kind of tilt you toward. So if you don't have many years to invest, you're going to want to know that just thinking in terms of weekly returns instead of yearly, you have the potential of dramatically increasing your returns, because even your weekly returns are modest. There's so many of them. And if you compound those returns, you'll be shocked at what it can add up to, which you get to see in a moment. But for now, let's take a look at the third pillar of our plan, which is a tax-free build-up and payout. So if you've ever paid a lot in taxes in your life, this part should be extremely appealing. The only people I know that really aren't upset about taxes are the people that don't pay very much of them. But if you ever have one of those really outstanding years where actually you're surprised at how much money you made, you're also going to be a little bit surprised at how much money they take. And that's really true if you live in a high income tax state, but even if you don't, the federal government kind of gets with the program as well. So in the Taxpayer Relief Act of 1997, Congress gave us a great gift I believe every American should take advantage of. This is the coolest thing in the world. It's the Roth IRA. And I want to tell you, if you think IRAs or retirement plans or Roths are boring, they might be if you're in one of those investments, where it's like a slow trip to nowhere. If you get a really good trading strategy inside of one of these things, it's gonna blow your mind. With a Roth, you put in after-tax money into a trading account, but that's just exactly what you do if you open any trading account, besides maybe a regular IRA. But here's the kicker: any money you make, any profit, is yours to keep. That means both the buildup and the eventual payout is completely tax-free. And listen to this, it's at both the federal and state tax levels, because state taxes are determined by what you owe the feds. So if you don't owe the feds anything, you don't owe your state income tax anything. So, as long as we're fantasizing here, just imagine 9,000, 10,000, 12,000, whatever this happens to turn into, completely tax-free. Now you actually really feel like you're getting away with something. I mean, it's amazing. And this isn't some criminal weird thing where we're sneaking around in the bushes. This is the exact program that the US Congress put together. They want us to take advantage of it. They don't want to have a bunch of people impoverished in their old age. They want us to not be a burden. We don't want to be a burden. What an incredible program. There's some rules. They're not that bad. You can contribute up to $6,500 a year or $7,500 if you're over age 50. So just start thinking about this program. What if you put, if you're over age 50, what if you put in $7,500 a year into it, or even $6,500? For our figures, I'm going to split it right down the middle, and I'm going to pretend that we're putting 7,000 in it. So, it's kind of the average. You can contribute to a Roth if you make up to $153,000 for single filers and $228,000 for married couples filing jointly. And these figures are up. They kind of raise them every so often, not every year, but they do raise them. And you can contribute anytime during the tax year right up until April 15th. And if you have the account open for at least 5 years, you can start taking contributions as early as, or the buildup as early as 59 and a half. But unlike a regular IRA, you don't have to take them, which is really cool, because in a regular IRA, the government really wants to tax that money. So they start forcing you to take them at like age 70 or something. So here's another cool thing about the Roth that a lot of people don't know is whatever money you put into it, like say over the years you put in 50,000 or whatever, and you want to take that money out, there's no penalty for that. You already paid taxes on it, so it's your money. It's just not a problem. It's just the build out of the profit you'd have to pay taxes on. So this is so flexible. It's so cool. I don't know why everybody doesn't have a Roth. And I actually paid quite a bit of money in taxes to convert my regular IRAs into Roths. The minute you do that, you have to pay tax on that money because you didn't pay it the first time around. Well, that was worth it to me to get just about the vast bulk of my money into Roths. And it's just so unbelievably cool. So let's put it all together and see what we've got. The safest strategy anywhere, weekly income that compounds to some pretty astonishing returns, a strategy that's perfect for a Roth IRA, and you can trade this in a Roth. We're all doing it. Where you have, me and all my subscribers are doing it, so it's super, super cool, where you have both a tax-free buildup and payout. So that's really appealing. And let's see what that translates into the real world. Let me show you some typical trades taken right from my weekly trading letter. So this is the commentary here, and I've got charts and so forth. But we're going to actually look at some trades, and these are the ones that we've just been doing. I do 2 trades a week. I do one Roth trade, one Roth IRA trade, which may be more conservative, and then I do an aggressive trade. So the Roth trade is almost always on an index like the S&P 500 or the Russell 2000 or the QQQ, something like that. So we don't have individual stock risk, an earnings announcement or something. And then the aggressive trade is just the opposite. It's almost always on a regular stock because we want that volatility. We want to take advantage of that. That's to our benefit. So let's just take a look back This is Burlington stores. It's retail store. I mean, look at that trend. That's pretty darn nasty. So when the stock is going down, we're going to sell something called a bull or a bear call spread. And what we noticed about this particular stock was relative weakness. So I've got a proprietary scanner. We put this together. It lets me look for stocks, lets me look for really high high probability setups. Ever since I perfected this thing, I don't want to say we don't lose, but I'll tell you what, losing on a trade is irregular. That's weird. It just doesn't happen that much. So with this one, here's my comments. While the rest of the market has been rising, Burlington has been falling in a clear sign of relative weakness. With the market rolling over, this looks like a good bet. So we also always want to trade in the direction of the overall market. You can see it that the stock did exactly what we were thinking it was going to. And we took in 70 cents and it expired in May for a 9-day, 39% profit. Now, here's really important for you to know. We target a 20% to 25% profit, and that's only in 9 days. We're only in the trade for 9 days. That's the max if we let it go to expiration. We can also get out of the trade early if we're getting a little nervous or we kind of feel like a direction change is coming. But these, and we stack them up, right? So every Friday, we have things expiring. We got a couple of things expiring. So we really have paydays every single Friday. So a lot of the time we'll, if we're on a roll, going good, whatever, we'll exceed that 25% target. In this case, we got 39%. So the trades that I'm going to show you are just all the trades we've done basically for the last 2 months. I'm not gonna cherry pick. In fact, I had to kind of look kind of hard to find a losing trade. I had one loser in 2 months. So we took in 60 cents on RH. This is the old Restoration Hardware, and it expired May 12th for a 9-day, 32% profit. You can see the commentary here. After plunging for most of March and most of April, has been making a comeback, but higher interest rates and more bearish markets are likely to turn this one lower. And I tell you, and I don't just show you on the chart. In the subscription, you get the exact instructions. I tell you exactly what to buy, exactly what to sell, exactly how to do it. I have all this really great education. I never leave you hanging, never leave you wondering. I know for a lot of people, they've never done this before. Once you start doing it, it's just like clockwork. I'll also show you how to set automatic orders, so you just don't even have to watch your play. So this is Goldman Sachs. The mighty vampire squid is actually kind of fallen on hard times. We took in 73 cents. Closed the play early on May 19th, as I guess got nervous about a change in the market. We took into 73 cents. We only paid 5 cents to close the trade. So we netted 68 cents for a 9-day, 38% profit. But it wasn't 9-day. I think we closed it on expiration Friday. That's interesting. This is ADP, automatic data processing. Been a consistent slump for months. We took in 50 cents. Closed the play 5 days later on May 24th, paying 15 cents, netting 35 for a 5-day, 18% profit. On this one, okay, this is a great one to show you because this was on the SPX. The reason it's a great one to show you is it totally went against us. So we sold a bear call spread on the SPX this is a good example of what happens when it goes against you. So we sold on the SPX for $1.25, but we're stopped out just 2 days later. I mean, the market totally reversed, totally surprised us. We got stopped out 2 days later at $2.25. Well, we rolled up and sold the exact same expiration again for $1.15 credit, and that expired worthless. So we netted 15 cents for a 4% profit. So this is actually a trade that went against us. We still ended up making 4% on it. So one of the cool things about options is, I know it's kind of a cliche, but they give you options. So just because a trade goes against you and stops you out of it, you're not out of it. Not if you use this strategy. There's almost always something you can do. So here it just kind of just shows it. So our first one, step number one, we sold the 41.70, 41.75 for $1.25. Number two, we got stopped out at 2.25 for a $1 loss. That's the difference between these two credits. You can see what happened here. And then, when it was right here, this big green bar, we rolled up and sold the 41.90, 41.95 for $1.15 credit, resulting in a 15-cent net credit, which ended up expiring worthless. I mean, the thing just dropped like a rock here, and we ended up with a 4% profit on that one. Lots of little things that you can do. We sold a bear call spread on the SPX May 16th for $1.05 and got stopped out 2 days later at 260 for a 39% loss. So this is what I wanted to show you. This was the only losing trade we've had in the last 2.5 months. It was actually, I wanted to show you a loser because it's just not credible for somebody to be showing all their winners. You know, anybody that's traded in a length of time knows that doesn't work that way. But I actually have a little bit of a hard time coming up with losers. So this was one of our losers, and it really reversed. It really shot up, and I just thought, you know what? I don't want to roll it. I don't want to risk it. This is one where we'll just take a loss. Now, if we're making 25% in typically, and sometimes we make 39% or more, you can see that it only takes 1 to 1.5 trades to make back a loss, and we have an over 80% chance of winning. Actually, it's better than that on every trade. So losses never worry me too much. If they start turning into a habit, yeah, you should start worrying, but 1 or 2, you just make up the difference so quickly. On May 24th, we sold a bull put spread on ASML for 90 cents, and it expired 9 days later. Now, this is just this last Friday. So this is really, really recent. I'm showing you all recent trades that we've gotten into. Expired 9 days later for a 56% gain. Now, think about it. We're only targeting 25%, but what happened is when we proposed this particular spread, which is right in here somewhere, the thing shot up so much the next day that instead of getting our, this was on a $2.50 spread, instead of getting our 50 cents that we were hoping for, we got 90 cents. So that really, really, really juices because, you know, it just moved the next day. So we can actually get some pretty substantial returns by doing a really boring, really total probability stacked strategy. Let's see here. So let's get a little reality check. So like I said, we target 20 to 25% return in good markets and bad with over an 80% chance of winning. So that's kind of a really good winning formula. It's also conservative because we tend to do, as you've seen, quite a bit better than that. I didn't cherry pick those. Those are just the 2 trades we did every week that I just showed you for the last couple of months here. But we hold back about 40% of our account for buybacks and rollouts, like we did with the SPX. We needed to roll it out, so we needed some money to do that. And as you've seen, we don't always win. So what can you realistically expect? Don't want to blow any bubbles here. So we're making trades every week. So you're usually bringing in returns every Friday. And even if you just got 12.5%, half of what we target, that's still 50% per month. Okay, so that's kind of outrageous. But because of buybacks and losses and only using, keeping aside 40% of our account in cashes, that's too rich. Let's say it's just half that. So 25% per month. That's all we're going to shoot for, 25%. But to be extra conservative, let's cut that down again. Personally, I think you can do an easy 10% per month, and we've done better. As you can see, we've been doing better. But let's make these estimates really conservative. Like I say, I don't want to mislead you. I don't want you to get overexcited. I want to actually show you how well this works, how incredibly well this works with just using really tiny conservative numbers that I know that even a beginner can get. Let's say all you can get is just 7% per month. Keep in mind, we have returns coming in every single week. 7% per month divided by 4 weeks in a month. I mean, that's, what is that? Like a 1.75% per trade. And what are we getting? We're getting 25, 30, 39%. So, I mean, this is crazy, but let's say just 7% per month. Keep in mind, we target 20 to 25% every 2 weeks, but let's say all you can do is 7, just a fraction of what we're shooting for. What does that turn into? That's just 3.5% every 2 weeks, about 1/7 of what we're targeting. And if you follow my directions and the mathematical probabilities say you'll do a lot better, but let's just stick with this really conservative figure. If you open a Roth today and put 7,000 in it, so, you know, like I said, that's halfway between that 6,500 and 7,500, because I don't know how old you are. If you're 50 or more, you can put in 7,500. If you're younger than that, good for you. you only can put in 6,500. So we're going to do an average here, and we add 7,000 per year. So we just do this every year for 3 years. That's all we do this, just 3 years. And let's say you don't have any other retirement plan. You never did anything else. You know, you're just out having fun and went through a few divorces or whatever, and just never got around to it. Okay, that's fine. And all we got is 7%. So we're not even rocking this thing really, but we're using a very safe strategy. So what do you have at the end of 3 years? Okay, this should kind of blow you away. If you open a Roth today and put 7,000, add 7,000 for just 3 years, getting 7% per month using this very safe strategy, look at this. This is the buildup. This is an exponential buildup. So at the end of 3 years, you've got 127,885. So normally, any financial advisor is going to tell you that you can't live on that. You know, you need $1 million or $2 million or whatever, because they're basing it on the returns that they are touting. But at 7% a month, that comes to $8,952 in monthly cash flow, and it just keeps going up from there. And in fact, the very next month, it's over $9,000, and that's why that's where the title of this presentation comes from. Over $9,000 a month in tax-free income. Anybody can do this. If you're 18 years old and you're working, you can open a Roth. If you are 80 years old and you're working, you can open a Roth. It's fun. It's super cool. It's great to watch the buildup. You might do better, you might do less. I realize this is a perfect graph. That kind of doesn't happen typically in the real world. In the real world, we have ups and downs. We all kind of know that. But what if it even comes close? I mean, what if this even comes close? Keep in mind, this isn't something you have to be on all the time. I mean, this is something where you've actually got a lot of freedom. You can check your trades if you want to, but I'm going to show you how to set automatic orders. So either the thing expires worthless at full profitability, or you get out for half of the potential loss you'd have otherwise. So you can try this strategy out for yourself. I really encourage you to do it, you know, to get into it, to study this. And you can start with as little as 5,000. That works great. There's just one problem. And that is, if you don't do well right off the bat, you might disregard the whole strategy and quit. I've seen a lot of people do that try and do it on their own. And that would be a shame, because this really is the best way to trade because of your very high likelihood of winning, and the hands-free nature of the trading once you put on a position. So to make sure you start off profitably and stay that way, I put together an educational package that's the best anywhere for this strategy. This is how I've been making a living for the last 30 years, or once I really discovered the power of selling versus buying. You look at professional options traders, they call the buyers the contributors, and they call the sellers the collectors. And there's a reason for that. So I used to sell this, you know, when I first really started rocking it and making it really work, I'd sell it for $2,500 for this package. Includes a subscription. It's super, super cool. Sold a ton of them at that price, did really well. Still get thank you notes from the people that are doing it. People are doing this. They've been doing, you know, this was actually 20 years ago that I used to sell it at that, almost 20 years ago. The whole package is called The Winning Secret, and I'll tell you what it includes. It's cool. First, a little intro on how to trade credit spreads for fun and profit. You're going to dig this video. It's super fun. Shows you a step-by-step how to trade credit spreads, how to make them work, why they work so well, and how they can work for you. And then this is really the big meat of it. There's a 161-page downloadable ebook, complete with color graphs, charts, pictures, everything you need. 10-chapter video series. I just made this. It's really up to date. It's really cool. It's exciting. It's easy to watch. You can hear and see exactly what to do to start generating income. And you'll also gain access to all of our archived webinars and video tutorials for life. And you'll have access to anything else that we add to it. Plus, you'll get videos that show you how to set up automatic orders. This is really the lifestyle part of it, with our favorite broker for spread trading to automatically trap profits, whether you have time to watch the markets or not. I love this part. And Thinkorswim makes it so easy. They've got so many if-then orders. Also, you'll get a subscription. You'll get your first month subscription with the entire educational package. 2 new high probability trades per week. The truth of the matter is, I never want you to pay for anything. If it's really good education, the market should pay for it for you through your profits. And that's my intention. So I'm going to show you exactly where to sell your spreads, exactly how to sell them for the possibility of maximum gains with minimum losses. You're going to have 8 trades to make back the tiny amount of money I'm going to charge you for this entire package. So I think you got a really good chance of not having to pay for any of this out of your pocket. Plus, as an extra bonus, you'll get a 10-module video course specifically on trading the weeklies, which is the best thing that's ever happened to options. And on top of that, on top of all the online support that you get, the whole education package, the subscription, you get to talk to Deanna here, and she's going to take you through a free one-on-one orientation on the phone, and she's going to help you get your account set up the right way. We want a certain broker. You got to tell the broker certain things to be able to trade in a Roth. She's going to walk you through all that. And the best way to take advantage of your new service, you can spend as much time as you want with her. Typically, these orientations take about 40 minutes. They're fantastic just for you. She's a cutie. She's really sweet. She's really on point, and I think you'll like her a lot. And then here's the biggie. You're going to get a personal one-on-one. Now, I would wait a little bit until you know the strategy a little bit better and you're actually trading it. But you get a personal one-on-one real-time trading coaching session with Alicia. Now, Alicia, I'm fortunate to live in a college town. She graduated in finance. She's smart. She's beautiful. She's not going to swear in front of you, but I will say that our language in the office has kind of gone downhill ever since she came on board. She's great. You'll love her. And the thing about Alicia is she's smart. So when I've got a new trading strategy, I'm thinking about doing something, modifying. She's the one I talk to. I hate to say this, but she probably knows more about options and how they're structured, trading implied volatility, volatility collapse, all that complicated stuff. She knows more about that than I do. I like to keep things really simple, but you get a 45-minute personal coaching session with her. We charge a lot of money for Alicia's time, and you can get a coaching package. You can sign up for 3 sessions or 8 sessions. We have packages, but I'm going to include it in this package here. And you're going to like her a lot. Just, she's so good at making money. She's so good at making our subscribers money. I would wait a little bit, like wait a month or 2, and then get your session with her, and it's going to make a bigger difference for you. So this is a whole package I put together. It's the link that you're going to go to is retirementfreedomplan.com. And I know I went really, really fast. We've also got a phone number here, a 1-800 number that you can copy down. There's a lot here in this package. And what I wanted to do is I wanted to finish up just in like 45 minutes or so to give you a chance to answer questions. Some of this stuff, it might be new to you. You might not be familiar with it. I know people talk about trading options and making zillions of dollars overnight, and that's just, that's great, but they don't talk about you blowing your account up 2 or 3 times in the process. I want things to be safe. We use stops. Right at the sold strike, because options theory, the way options are priced, that's going to cut your potential loss in half. Really like that safety. So if you've got questions or you're curious about this, I want to reserve some time here at the end to answer those. So go ahead. I'm just going to take a quick look at the chat. Don to everyone. Don says, Peter, why even do this when you're a billionaire? I'll tell you what, I like it. It's fun. It's challenging. It's cool. It's fun to outfox the markets. Let's see. Would this plan have an API with Thinkorswim for order entries? Does it have an app? No, it doesn't. I just tell you what to do. We could write one. I suppose that's not a bad idea. But the orders are pretty simple. I give you a lot of details. I give you a lot of education on how to enter the orders and the automatic orders. And so I don't think you're going to need an API. And then the link for the offer is this Retirement Freedom, but you guys, the hosts, might want to put that in there. They're probably doing that right now. Oh, there we go. It's already done. Fantastic. Yeah, orders go through Thinkorswim. That's our broker we like the best. I've tried a lot of other brokers. A lot of them say that they're better in one way or another, but I just like the way Thinkorswim can get you in the middle of the bid-ask spread. They can get you filled better than anybody else, and they have really great automatic orders. is this tax-free applicable trade here in Canada? So a Roth IRA is an American invention. So it's not available in Canada unless there was an entity perhaps here in the United States that you could trade through. And that's a whole different conversation. But the Roth IRA is for Americans. That's an American piece of legislation. So the Roth IRA is linked to this Thinkorswim platform. Yeah, exactly. So that's what I did is I just opened a Roth IRA with Thinkorswim, and then you just fund it, and you just start trading. And let me go back here and see if I missed anybody. I don't like to not give people attention that are nice enough to stick around and ask a question. Okay. I'm all the way back into Jody's stuff, which was super interesting.
Hey, Peter, is there a minimal capital requirement people need to secure so they can start trading and earning, the returns you presented us with?
Yeah, first of all, Rodrigo, I love the way you talk, and I just want to know that if I was a girl, I'd probably think you were pretty spoke really well. So I know that's like a little side note we don't need to go into, but I love your accent. Anyway, you can open an account.
Have you seen his hair? Have you seen his new hair, Peter? I mean, my goodness.
The hair is fantastic. I mean, you can't beat the hair. Yeah, you can't beat the hair. The hair is great. So just $2,000 to open an account at Thinkorswim, but there's something called margin requirements. So like say on the SPX, if we collect $1 on a $5 spread, so that's if you made that dollar, if it expired worthless, which we try to make that happen, that's a 25% return. But what they're going to do is they're going to hold $400 in margin in your account until that trade expires or you close it. So with $2,000 you can probably have a couple trades going on at once. You could probably do this with 2,000. I kind of tell people 5,000, but you can do it with 2,000. 2,000 would work great. And I'm scanning for more. Oh, Peter, that's not bad. I'm 92. Good for you. Gosh, I can't believe a 92-year-old's watching, but I'd take my hat off to you. So somebody asked, Don asked, do you even know what the compounding is? The compounding is shown in that chart that's kind of going straight up. I don't like to emphasize that too much because I don't want to get people's expectations through the roof, even though it is pretty great. So what I recommend you do is that you just trade it. You trade with a small amount of money. You see how good this is. You see how the safeguards work, how our automatic orders work. And then if you like, start adding to your contract. So just start off with like one contract and you can work up to 10, 20. I'm doing some trades now that I like so much. I'm doing with 200 contracts a whack, and that gets kind of exciting. How do you derate the 50% return per month to 7% return to month? All I'm trying to do is bring down expectations, so I'm not promising the moon. What I would rather do is you think 7% return per month based on what I said, and then you end up getting 20 or 25. I'd rather have it work that way. The automated trades, that's in the Thinkorswim platform. I give you some tutorials on that. You don't really need the information unless you're doing this, but if you decide to do it with me, I give a lot of great videos, short videos that show you exactly where to click to automate your trades. You can play Thinkorswim like a violin. It is such a beautiful instrument. I take my hat off to the programmers that created that are constantly adding to it. You can do so many things without having to watch your trades. API link for offer, we got that. All looks good. So any other questions? I mean, it's a delight to be here. It's a delight to share this with you. Any other questions from our hosts or anybody that's listening?
Hey, Peter, Michael has a question. Do you need $2,000 in the Roth to start?
Yeah, I mean, I think that's, and the reason I brought up margin requirements is I don't want you to get frustrated by not being able to make trades. So if you have $2,000 in the Roth and you're only getting $400 in margin hold on a $5 spread, and we do a lot of 250 spreads, so that's only if we get 50 cents on that, that's a $200 margin hold. $2,000 actually goes a long ways. You can start this, you can trade it, you can set up the trades with automatic closes. And so it's not going to take a lot of your time. And frankly, it doesn't take a lot of money. And I would say prove it to yourself before you do it, but you're going to like it. People come on board with me and they don't leave. And why would they? I mean, it's just a very consistent way to make money. And it works great. And if you want to do your crazy, wild trading strategies in some other venue or, with a whole bunch of technical analysis where there's lines going all over the chart, and it looks like somebody threw some spaghetti at the wall. I mean, absolutely go ahead. I don't want to take away anybody's fun. I know a lot of people really enjoy that, but I just want consistent cash flow coming in every week. And this thing works better than anything I've ever seen. It really is it's like what the kids call a hack. It's like a really cool hack.
Okay. How about this one? And somebody's asking if they can do this in Europe. I'm sure you could take the trades in Europe, but it's the same answer with the Roth, right?
Well, yeah, you can do it in Europe. I mean, I don't think you can do it on European exchanges, but you really wouldn't want to. They don't have the kind of we have really good really well-developed financial markets here in the States. I was over in Amsterdam sitting in a little cafe and I was making trades with my laptop in the States. And I just put on the trade, enter the automatic orders. So I know that the trade's going to be taken care of, whether it goes, for me, against me, sideways, whatever it does, it'll be taken care of. And I just close my laptop and have another cup of coffee. You can do it all over Europe. You can do it from anywhere. You can basically anywhere you can get an internet connection. And
okay,
nowadays that's getting to be everywhere, especially with Skylink. My goodness.
Yeah, right. No kidding. So how about this one? Do you adjust trades in need always by rolling, or do you or also by delta hedging, or which other moves?
Well, I usually roll, but here's the thing, like options traders that get into options, they get into things like delta hedging, delta neutral, all of that stuff. I've been down that road, done all of that. Basically, here's the question you have to ask yourself, and it's the only question that's relevant, is which way is the stock going to go? And if you had a bear call spread and the stock took off, it broke out and it stopped out your spread, you have to ask yourself, is it going to keep going higher or is it going to reverse? If it's going to keep going higher, you don't want to roll up. And in many cases, you don't want to roll down, because if it's really an extreme move, it can reverse. So, and I showed you a couple of trades there. Sometimes you just take the loss. You just go, it's 39%, whatever it is, you just take it and you say, I'm glad to be out. The market's gotten kind of jiggy. It's kind of broken a pattern. I don't know which way it's going to go now, so I'm just going to step to the sidelines. Other times you go, this thing's going to reverse. So then you roll up. But in terms of where the delta is and some of the other indicators, not so much, because it's not really relevant. What the relevant question really is, which way is that stock going to go? And like I say, we trade with some really good proprietary software, and I tell you what to do. I mean, I'll come out. We have a texting service, email and texting. And on the texting service, I'll just say, and I don't do it all the time. I'm not trying to ruin your life. I'm not trying to give you 3 texts a day. I might give you 2 texts a month, because basically the idea with this is to do it, set it, forget it, go enjoy your life. I mean, go swimming. Here we are in the middle of the summer. If you're on the East Coast, you might be looking around for a way to get out of the smoke. I know what that's like. I mean, the little town I live in Southern Oregon was smoky for the last 7 years in August. Finally, I had to go somewhere. But the cool thing is you can trade. I mean, you can trade, you can make money from anywhere. But